Hey, good afternoon, everyone. It is 1:30. Let's just jump right into what the markets did today. In front here is the December in all of these contracts, and so the question is what do we do with it? So first of all, if we look at December, and I'm going to take some of these off to clean the screen up just a little bit. All right, so here we are, just a chart. Give you some perspective here on what's going on. Okay. So from the low that was established in early May or in mid-May, we have this uptrend line, and then we have this downtrend line from here, creating this triangle and wedge. What we had Thursday and Friday after the report was a downside breakout of this wedge and all the way down to the bottom side of here. Obviously, $5 is key psychological support, right? So the move down, and now we've reversed it, showing a false breakout. Now, we don't want to get overly excited about the false breakout to the downside, saying, oh my gosh, we got to go higher, because we still have to break out to the upside as well. And that really doesn't come into effect until this high right here at 527 3/4 gets broken and closed above. If we just spike up and come back down, it's not enough. We want to see it close up above here and hold that level before we can get a sustained rally moving higher. Now, why would it rally? The reason it would rally is because, hey, South America's hot and dry. We got political tensions. All those facts that are in the market are already known, but that doesn't mean that we can't rally a little bit more. And we also have a short fund position. So it makes sense. If Brazil's hot and dry, we got to go higher. That makes a lot of sense. And countering that is the really pretty bearish outlook that's in there for corn, and we went through that last week with the outlook on carryouts. So I don't think that this is going to like turn around and rally to $8 or anything like that, but we could rally and put some pressure on this 527 and potentially some higher levels here, just out of short covering and out of momentum. So if you look at the December 23 contract, it looks pretty good too, right? Now, we've actually been more bullish this than the other ones just because it seems like it's been overdone to the downside. We have these big bullish divergences all over the place, and a move back up above the 481 to 85 range, right from this high right here up to our hedge line. That should really get this market going and put some pressure up on the 510. And then ultimately, we still think DC23 corn can come back here. So where are we, and how do we want to be positioned? We are open to the upside on 23. We're looking for higher prices on 24. For those that are hedged, we want to look at reownership if we're able to get back up above here, right? We either want to exit the futures or put some calls on. Either way is fine. And when it's calls, you can take December strike prices, or you can come out back into March or May and hope that we invert the market and capture some premium there as well. That's fine. Any of those strategies is viable. We got a lot of time to work with. The problem with lifting futures is that if you're long here, if you exit, you have a high risk of whipsaw. So if you sell the downside and then get covered back out, a lot of times that market will just go boom and just rip your head off to the downside. So I kind of like call ownership here, at least until this high gets taken out of, or it gets taken out, or until we see some sort of fundamental reason that corn would really rally. But so for now, I kind of like the idea of call ownership against any forward sales in December, and likewise just open ownership in December 23. Okay, soybeans. Here's your January soybean contract, big up day, up 38 cents. Obviously, this is on the heels of weather. Soybean meal went crazy today, and it is out to new highs, right? If I put that chart on here, and I will do that for you, it is SMZ23. We go soybean meal. You look at this thing, it really erupted to the outside, broke out to the top, and there's really no end in sight for what soybean meal could do. So what will soybeans do? Well, I think they've got to go with it. Now, what's interesting about this is that, remember, we've been looking at this as counter trend for a long time. We have this downtrend line in place, and if you snap that, you have the trend channel that's established down here. Now, on the up move, you have a nicely developing base channel to help determine whether this is corrective or whether it is impulsive. And a lot of times you'll have a breakout and then you'll have a move back down, now followed by another one. So think about what we just talked about in corn, right? You have a breakout to the downside. Now you have a move back up inside the middle of it. Will it come back down and do this or not? You know, if this is in reverse, this is what corn looks like. And so I don't know. There's no way to know whether that's going to do that or not. But beans look really good for higher here. A move up above this TDST line right here, which is off of this high right here, back at 1387, really does put in play the contract high here at 1440 and probably higher above that. And I think we have already put in sequential. No, I haven't. So if I put in relative retracement and look for where beans might go, you know, you got to look. You just have to look higher. You know, you're looking at a much. If this level here is violated at the 1429 level, then this 1508, 1550 level becomes a very high probability, and then this is more likely than not up in here. So beans could really get going, and that should provide some uplift for corn as well as we digest the South American weather and try to predict just what kind of premium we need to have on corn and beans before new crops get started. Remember, we're not going to really jump on the bull wagon here with as bearish as corn may get. I'm not opposed. We definitely want to pick up as much of this upward move as we can, but I want to be real conservative and stay with a hedging mindset, because I don't think that we're in a situation where we're going to end up short corn, even if we do put some pressure on beans. DC24 beans look really good as well. They're in this ascending wedge. You know, we do think that this upper boundary here at 1320's got to go, and we got to come up to higher levels somewhere in the near future in order to make sure that beans do have the acres. So I don't think that we go to 20, 25 bucks like maybe we would have thought a few weeks ago, because corn is so burdensome. I think that's enough to put a cap in beans, unless something continues to change and we get dry and South America continues to get dry. So that could be the catalyst, but I don't think that's what the USDA is expecting. All right, now here's Kansas City wheat. Wheat has a long lower shadow. We have a 1-2. We have a kind of a triple bottom here in place. I think wheat turns for higher here, and it's got to go with corn and soybeans. It's lagging. It's really not performing very well. But if we can get above 662, then maybe we'll have a day like what we had in beans or corn today, and just take out this whole range in one day and then look higher. I think that's what needs to happen in wheat. I think it makes sense fundamentally. I think it makes sense technically. I think wheat has been in that position for a while, and it just continues to grind itself lower. But maybe today we found all of the selling exhaustion that could be in effect there, and because this is what it looks like. But you know, a day is not a trend, and certainly this isn't enough to say, oh yeah, that's done going down, because it could roll over pretty quickly from there. So where do we want to be positioned? Well, if you're sold 2023 wheat, I think you want some reownership on. I really do. I think it makes a lot of sense to have calls on. Maybe they're $7 calls. Maybe you just want to own the futures against these lows. I think that works and makes a lot of sense. As far as 24 wheat goes, I don't see any reason to sell it from these depressed levels. I think you got to wait and let it work itself higher. And I think wheat eventually turns to look at corn and says, hey, you've got too many bushels, so corn should be capped and then have to work lower. And but there's nothing that says that they can't all move in concert together higher as we price in the Brazilian bean situation. And that looks to be the most likely thing to have happen here in the short term, and then we'll see where we go in the longer term after that. All right, that's what we've got for you today. That's 10 minutes. We'll be back with you either tomorrow or Wednesday, depending on trade action, but for sure Wednesday. Remember, a day is not a trend, but a day is a nice start to a trend. It's got to start from somewhere. And so we'll just stick with it and let it work itself higher, and we'll be happy for higher prices as we go, especially in the 23 crop, and then we'll be defensive on 24. Hope you guys have a great night. Remember, there's risk trading futures and options, and you should only do so in light of your own financial condition. We'll talk to you later. See ya.